So today the Dow was down, say 500 points. Now Home Depot is a decent component of the Dow 30. When you go to the monthly chart, you can see the current candle looks like a rejection wick is forming. However, we're only in the second week of February, so this could easily turn green for the month. Going down to the weekly chart, what looks like a potential topping tail is really just some basing, uh, which price has come out of from this resistance support band at roughly $340. Now, before we continue with analysis, let's actually look at the news for today. So shares of Home Depot were down Tuesday in response to a hotter than expected inflation report, which further cooled off hopes that interest rates would come down soon. Since the home improvement retail is sensitive to interest rates, the stock fell on the news. Now, the housing market has been sluggish due to, in part, to high interest rates. You know, we're talking on the at 1.7% for a 30-year mortgage, which the Fed Reserve boosted in an effort to bring inflation back under control. This is when they gave everyone helicopter money in 2020. Tuesday's morning's Consumer Price Index report showed that the inflation rate had slowed again in January, but not as much as anticipated. Year over year, the overall CPI rose 3.1%, which was ahead of estimates at 2.9%. On a month-over-month basis, the index rose 0.3%, up from 0.2% increase in December. Now, some of this could be due to the issues that we see over in Europe and the Suez Canal, which is causing boats to go around Africa to Asia. That's adding cost to goods, so that's one possibility. Nevertheless, Home Depot is certainly strong enough to withstand whatever volatility the housing market throws at it. But a rate cut ahead of the peak spring home improvement season might have given a boost to the company's performance. That's unlikely to happen at this point. And we're going to know more when Home Depot announces their earnings on February 20th, as we are still in earnings season. So, kind of going back to the weekly chart, just want to point out to you again this basing that we see taking place. Personally, I do have a target at 380. Why 380? Well, that was the start of this M pattern, which is typically a bearish reversal pattern. And you can see the trough of that M pattern sits right at 380. All right, so daily chart. You can see price is continuing to respect the moving averages, more so respecting that 50-day moving average. And it did close right at the 13 simple daily moving average. So the first step is we need to close that gap. What we're going to see is if we have spillover continuing into Wednesday's session. If so, look for price to retest. Again, that resistance support band. See that a little better on a monthly chart, which would be an opportunity to go long. Thanks for watching. Subscribe, please. Like the video.